When the cryptos market crashed by nearly 50% across the board, I was just holding my bag of coins, waiting for the light at the end of the tunnel. But I think the light is finally here, and here's why. Hey friends, this is Gerald, and I think we may have just hit the bottom of the crypto market. And here's what I'm thinking. Before we even dive into the reasons why I think this is the bottom of the crypto market, let's first take a step back and wonder why did the crypto market even crash in the first place? And after which we can look at the fundamentals of cryptocurrencies and wonder, hey, is this a good long-term investment? Speculation, kind of. So let's start with what caused the crash in the crypto markets. And when I try to understand the reason, it just baffles me how did all these things kind of link together? So here's what I found. Basically, it all started with higher and more persistent inflation in the United States. And because of high inflation, the Fed decided, you know what, we're going to increase interest rates in hopes of reducing inflation in the country. But inflation did not waver and continued to stay high throughout December, and then people panicked. Why did they panic? Because if inflation rate continues to be persistently higher than expected, what this means, more inflation. What this means is more interest rates increased in 2022. So instead of 3 interest rates increases, people were expecting, or analysts were expecting, 4 interest rate increases. Then you'll be wondering, what's the big deal? When interest rates increase, the cost of borrowing increases. So therefore, growth companies that uses a lot of money in order to grow fast stop growing faster because you can't borrow as much. It's expensive. And what's worse was that 2 big companies, Netflix and Peloton, reported slowing growth. Even Facebook, one of the popular companies, also reported a slowing growth story. So as individual investors, we may not think too much about it, but the big monies behind the scenes have started, moving monies around. Wait a minute. You may be wondering Gerald, isn't this video about cryptocurrencies and why are you talking about stocks and inflation? Well, here's where they kind of link together. This is because most of the investments out there are done by institutional investors and trading bots. But what this means is that whenever there's a change in the theme of the stock market, right? Like for example, growth stocks are no longer going to grow as fast and therefore their prices are going to plummet. What institutional investors would do is that they would reallocate and rebalance their portfolio to, mitigate against this thematic risk. So the story that has changed was that high growth companies will not grow as fast into the future because all your big stock companies like Facebook, your Spotify, your Netflix have reported slower growth. And that is before the cost of borrowing has increased. So what a lot of institutional investors have done is that they have taken money out from all your high growth companies, and that includes cryptocurrencies, which is all your risky assets, and move it to your safer assets like your government bonds. And that, my friends, started the downward spiral of the cryptocurrency prices. You see, when big money started to move money out of the cryptocurrency market, out of the top growth companies, what happens is that it indicated basically a bearish signal for your trading bots and your traders. And that is why we saw one of the highest liquidations on Binance when it comes to Ethereum and Bitcoin. And once prices have moved up sharply, everybody started to become scared. And as a rational investor, speculator, would you invest at this time where everything is going down day after day? You probably wouldn't. So you would wait, and you will wait for who to enter? The traders to enter. And right now, what I'm seeing is that both Ethereum, Bitcoin, Cardano have seemed to reach some sort of strong support. And in fact, Bitcoin has recently surpassed $40,000, which is an important mental support for traders, and Ethereum has also surpassed a very nice whole number of $3,000. What this means is that trading indicators have turned positive and traders are starting to buy, hoping that it would run, and this is exactly what happened today. But it doesn't stop there. In fact, one of the big tech companies, Amazon, reported crazy earnings, and then this kind of destroyed the previously thought theme that, hey, maybe growth companies are going to stop growing fast. In fact, Amazon just proved everyone wrong and shot up by 12% despite everything being red in the market. In fact, Amazon shot up 12% in a single day, which is phenomenal for such a large company. So what I've noticed is that traders have returned to start to buy up instead of selling. Top cryptocurrencies like Bitcoin and Ethereum have hit key support levels like $40,000 for Bitcoin and $3,000 for Ethereum. And optimism seems to have kind of waned in a little into the stock market and into the crypto markets, thinking that, hey, maybe the worst is kind of over. In fact, nothing bad truly happened yet. And because of these observations, I think this seems to be like the short-term end of this correction, I guess. But let's take a huge step back. Instead of a small step back, we take a huge step back and start to look at the fundamentals throughout this situation. In fact, when the crypto markets crash heavily, did the fundamentals really change? So with that said, I think that the worst for crypto markets seems to be over unless a huge catalyst occurs. What do you think? Let me know in the comment section below. And in another video, I'm going to talk about is crypto values even undervalued at this point of time. Do check out that video. I think you're going to love some of the insights I share in that video, and I'll catch you in that video. Take care, everyone.